Welcome on board Varun the MD at Britannia Industries. Varun, hi, morning, congratulations. Another solid set of numbers from you with a second quarter of double-digit growth. Can we say that you've now reverted to your past trend of strong mid-teen growth numbers?
Well, I've been dreaming of double-digit volume growth for some time. I'm glad that we are at that trend, and we hope to continue with that trend in this coming year.
Okay. Tell us, what was the sales mix like, Varun? How much of it came from premium products? What were the new innovations? What is it that you plan to take your revenue pie to in, say, the next 2 to 3 quarters?
So our innovation percentage was probably the highest that we've seen. So we track it as a separate key performance indicator, and this quarter was the highest as far as innovation percentage to the total number was concerned. So we are happy with that trend. But however, it's not large enough to make a material difference to our overall volumes and overall revenues, because it takes time for that premium segment to become, large enough to make the difference. I think we are on the right path. I do feel that we are launching products. We are, the beauty is that while we are launching premium products, we are also making sure that we democratize them for the consumer to buy them at the right price. And you will see a lot more of that democratization as we go forward. So the consumers will be able to buy these premium products at 10, 15, 20 rupee price point. As we go forward, and that's what we think is going to make a difference, because whether it's the urban consumer or the rural consumer, they've got aspirations, right? They want to try new products. Category after category, we are seeing that the consumption of the number of brands by each individual is going up dramatically. So choices is very important for the consumer, and hence for companies like us, providing the choices to the consumer is very important, and that's what we are going to do.
Varun, almost all FMCG companies have indicated that the rural growth has been faster than urban growth. Do you see that momentum continue? Do you see that as a structural change where more advertising expenditure would be directed towards beefing up consumption in the rural side of the economy, garnering a bigger share of that market?
Yeah, so we've heard the same. What I can tell you from my experience is that our rural growths have been high double digits for almost 15 to 18 quarters now. And that really is the reason for that is that we've always, till about 5-6 years back, we used to be predominantly an urban company with much lower shares in the rural areas and not an organized distribution system which would take us down to the smallest village. So we made an effort to make sure that we are available in the rural areas, and that availability drive is giving us a very good momentum as far as the rural markets are concerned. So while there has been an uptick in that momentum as well, but the momentum has been there for us. But what I hear from other companies is that for them it's coming back pretty strongly. So I'm hoping that that trend is only going to take us higher as far as rural growths are concerned.
I want to specifically understand that your margins sequentially have contracted. Now there is a marginal dip in margins at a time when wheat and sugar prices have come down. So what has led to this marginal contraction?
The margins are pretty much there. I don't think they've contracted. When you talk about gross margins, you talk about just the revenue minus the cost of goods sold. So I don't know. We look at margins very differently. Which margins are you talking about specifically?
Gross margins sequentially have
overall,
come down.
If you look at our NOBIT,
no, gross margins have come down.
Net operating profit margin has gone up dramatically.
No, so I have a Nomura report, Macquarie report in my hand, and the Macquarie report is claiming that gross margins have come down from 38.7 to 38.5. It's a marginal contraction, but it has happened at a time when wheat and sugar prices have come down.
No, wheat and sugar prices have come down, but overall there's been an inflation of about 3% because as you know that the oil prices have gone up dramatically. The duties on oil have gone up from 7.5% to almost 48%. So overall on the commodity basket that we have, there is an inflation of about 3%.
Now, if I broadly divide Britannia into two categories, and that's what you always like to do, the dairy category and the bakery category. The volume growth which is coming, is that coming in both the categories or this is coming in one specific category?
Well, the two categories are of very different size. So, let me just sort of decipher this for you. The bakery category is almost 85–90% for us, right? So the bakery category is what makes the difference to the overall numbers as far as Britannia is concerned, and that's where we are seeing very, very solid growth. The dairy category is only 5% of our total, revenues, and as far as dairy is concerned, we've made a concerted effort to make sure that we don't deal in commodities. There are certain categories which don't give us any margins, which are the commodity categories within dairy, and they used to be till about 4–5 years back. They used to be a substantial part of our dairy portfolio. We've made sure that we do not support those categories, and even if we do support those categories, we only support them if they are giving us any margins. The most profitable part of dairy as far as we are concerned is cheese, and cheese has grown double-digit for us, while overall dairy has not grown. So if that's your question, that's the answer.
My next question is that, I've been tracking Britannia for a long time, so I'm well aware of the fact that you've made a transition from the low glucose biscuit category to higher category. But competition also seems to be recognizing that. Your nearest peer, which is Parle, they've launched a new range of Parle Platina. Are you getting a sense that now there is going to be perhaps more competition from other players in the premium biscuit stroke cookie category?
No, absolutely. I do, and competition makes us stronger. Competition makes the consumer consume premium products. It always makes that segment stronger and bigger. So we are looking forward to that. In fact, if you look at both ITC has always been in the premium segment, and Parle has also been in the premium segment. With Platina, what they've done is they've bucketed a lot of their premium products that existed already under the Platina sub-brand. So that's what they've done. But yeah, they're doing a good job, and I hope that there is competition in that segment, and that sort of helps the segment grow. That's what all of us want.
For the international business, that's done well. Now, it may have come at a low base, but are you hoping to scale it up?
For sure. Our aspirations on international are certainly to be in more countries as we go forward. I would say that while the numbers are looking good, I would not say that we are out of the woods. There is a problem as far as certain countries are concerned. Middle East is a big segment for us, and Middle East, there are certain countries which have completely shut out. Africa, there are some troubled economies within Africa as well. So while we are making the efforts to make sure that we continue our growth trajectory, there are going to be some kind of there are going to be some kind of barriers as we move forward and try to get those growths. So it'll be very important for us to spread our wings and establish ourselves in more markets, distribute into more markets, even establish manufacturing operations in certain markets where we have a right to succeed. So we are looking at that seriously, and as we've said, we would like to open up at least one new market with manufacturing operations every year. And that market for this year is going to be Nepal, which is turning out to be a great market for us. And similarly, as we move forward, the markets could be in and around India, could be in Africa, could be in Middle East.
Varun, I remember chatting about this with you earlier as well, but you've mentioned that you're open to a joint venture for a dairy with MNCs. Anything that you've narrowed in on? Is it Danone? Are you already in talks with anyone?
So, well, let me tell you, we are in talks with some people, with some companies. But nothing is finalized till now, and whenever we are close to that, we'll certainly talk to you and we'll let you know. But that's not the only way forward. We could also go on our own. We're also evaluating what is the possibility of us scaling up. So it could be a joint venture, it could be us scaling up our businesses on our own, but we will know soon enough.
Closing comments, one hallmark of your term at Britannia has been that you were very cost conscious. You shifted manufacturing outside the core. You consolidated all the units, which gave you economies of scale. Are you reaching that threshold beyond which operating leverage is not going to kick in and margins will stop expanding, because you were able to plug out all the inefficiencies, and that gave you a strong operating leverage and J-curve in your operating line, because your margins where they were in single digit now in formidable double digit. But now, do you think the headroom for you to build on those processes more is going to be limited?
No, so that's my pet answer. I give this answer and I get this question very, very often. Frankly, what's happened in India with most companies, it's not just Britannia. Most companies, it's the high of growth, and everyone chases growths, and the cost part of it becomes secondary to most companies. In fact, in the last 20 years, we've seen that most companies have chased growth, and similarly I am guilty of that in my previous company as well. We used to chase growth. I do think that every company has the opportunity to tighten the screws as far as cost is concerned, and believe me, it's just a bottomless pit on how much cost you can get out of the system. It's just about creating the right methodology to look at costs and make sure that you go after them in an organized way. So just to give you an idea, we've gone from, in the last 5 years, we were at a cost saving of about 51 crores a year. We've gone up to 225 crores in the last year. And this year we're looking at a number which is even larger than that. So there is still meat, there is still room for cost savings. And I don't see that sort of going away in the next 2 or 3 years. Certainly for the next 5 to 6 years, I see no break at all as far as cost savings is concerned. Does that answer your question?
Because you shared that when we talk to some of your investors and some senior fund manager, they do tell me that okay, Varun's done a great job of bringing cost under control, taking operating leverage up, taking margins higher, but there has to be in headroom. So you've beautifully given me a strategy as to why companies can cut cost and how cost cutting is just in mind and we can still achieve it more. So good luck, Varun. I'm sure you must be very proud of the way how markets have rewarded your stock. The stock's been a multi-bagger. It was at 600-700 rupees a couple of years ago. Now it's at 5,000 plus. So good luck and thank you for joining us.
Thank you very much.